and big banks to operate. But currently, exactly 12th of August, the Central Bank of Nigeria publication telling us that will now open it purely for also investors to invest in it. The question is, this affects the equity market because an investment with over 20% returns will attract more investors than an equity market. Now, welcome to and this is Clockwise Live, where we're doing a total breakdown of what the open market operations is and how it's going to affect the stock market. I am here not alone, but with my stock market analyst and researcher. As usual, with a resounding virtual round of applause, welcome, Mr. Kanu. Welcome to Clockwise.
Thank you very much for having me.
This was a very strange, or it's a breaking news. I don't know which one we should actually classify it to be. Prior to this time, we saw that this was actually done by only big banks, big financial institutions. They were the one who were involved in the buying and selling of what we call OMO. Before we get down there, I would like us to know the difference between OMO bills and treasury bills. Some people don't want to know that there are the big difference between the OMO bills and the treasury bill. What's the major difference between the both of them?
Okay. OMO bill is, let me explain it in a way that people understand. It's an instrument by the central bank to control liquidity in the system. So the bank sells directly to the people that are the buyers. Yes. So in the OMO situation, that in this case, Nigerians have the opportunity of buying directly from the from the CBN, and so it is a tool that is used by the central bank to mop up excess liquidity. This is a pre-election year, and you know, so much money will get into people's hands for obvious reasons. Please don't ask me the reason for, but
I don't think I also know.
but money will get into so many people's hands. So it's a proactive measure to offer people to get a good yield for the cash instead of holding the 20% return on the money, and it's short term, so it's about 100 and
short term, just like treasury bills.
Short term, I mean treasury bill we have up to 364 days. So, so OMO here, the important thing about OMO is that it's coming at a higher rate, 20%. If you look at the bills are going for about 16%, 17%. With the, I think the last auction was at I think the 365, 364 days came in at 17.59. So that is active until you look at the OMO. OMO is now coming in at 20. You can even get at 20.3% of your on your money. So it's a really mop up excess liquidity. Instead of you to have your money sit idly in a bank account, why don't you just put it for 100 days? You get.
But before we get there, let's first of all look at what will be the effect on the economy of Nigeria first.
So the fact is this, like I mentioned earlier, so it's a way of really reducing the liquidity in the system. I mean, if you look at the inflation that we just had came in at around 15th of July. Now, and then you which is about 9%, between 6%. We're already having in the pre-election year, you have money will get into people's hands and demand push inflation. So a proactive measure by the I mean, if a Nigerian puts his money away, I mean 20%, that's attractive. So a Nigerian puts his money away, that means he has less to spend on discretionary income, and that would help to cushion the effect of inflation, will cool down the economy.
Let's look at the stock markets, because I think the fears of most investors that we'll start seeing some red candles because of a lot of things that will be happening, from sell-offs to actually invest in OMO. Do you share such sentiment?
Okay, so this has a nuanced effect actually, and I'm going to explain why. So you see, it's coming at 20% really, because and that is very attractive. But guess what? one of the things you'll notice is that very soon, there is an inverse correlation between the yield. So if you look at the attractive, people rushing, when everybody literally rushes in, by easy for you to just pick up your phone and call your the bank, to help you subscribe to the OMO. Of course, the only channel you can do it as an individual investor is to do it through your bank. So, if a lot of Nigerians do that, do you know what you expect to see very soon? What you expect to see is that the demand for OMO will skyrocket. That would also skyrocket the price. And what happens when price is up for fixed income? The yield comes down. Yeah. So the yield might come down so much so that it might. So initially, I expect two things to happen. Remember, we are sitting in a very critical time. This is August, and then by next month, the schools will resume. So liquidity demand on parents will become higher, and so there is also, you have currently take profit is happening. There's take profit, very serious take profit. You also have school fees are looming. Parents will also want to kind of close some positions to be able to meet their liquidity needs, and then you have this OMO, which is competing with the equity space, because OMO is like a guaranteed 20% return. Why would you want to do that, especially for people that were bond? People that came into the market in May and at the top of the market, and they are still sitting in very huge losses. Some of them that really don't understand market cycles might be forced to close out their position and take advantage of the OMO. So initially, I expect some kind of pressure on equity markets, because again, another risk-free competitor has come to town. But as demand pushes in, demand comes in, I expect the price of OMO to shoot up, and then the yields will come down. When it comes down, I'm not sure that a lot of people will not be as attractive anymore. And then that's number one. Number two, if you look at even for foreign portfolio investors, remember Nigeria offers for them an arbitrage. So the arbitrage for them is where, particularly even for OMO, which they have been participating in before now, but it offers that arbitrage because they have to borrow at a smaller interest rate, and then, or a lower interest rate, and then invest in OMO, and getting those 20% gives them a very decent arbitrage. But when that pressure comes in with the whole of Nigeria, like literally given the fact it's now becoming an all-commerce affair, then we expect price to shoot up and then yields come down. That will reduce the arbitrage. So for me, I think it will have a very serious short-term impact on the equity market. Not just equity market, even the treasury bills. Because and by the way, I think the CBN was very smart to mention this. They mentioned this after the last auction. Because if you tell me that for 365 days, I'm going to get 364 days, I'm going to get 17.59%. And then if they had delayed, if the debt management office had delayed that auction or had the announcement coming, if this circular from the CBN had come in before that auction, then I'm very certain that a lot of people would have sat on their money, because this would have been a way better opportunity for them.
In times like this, you actually see the one particular sympathy you want to share, especially with those companies that have not paid dividends, or they've not been paying dividends. This is a particular time where investors are going to take time to punish them very, very well, to ensure that, what do you say as a technical analyst in the market? Do you see opportunity in such situation? So
it compounds the opportunity. We had already said before now that profit taking, liquidity demand, and Dangote listing will cause a lot of dislocation in the market. We had already said that. But again, this OMO coming in now is now going to make it such that they will see that it might amplify that dislocation. But for me, guess what? I'm a value investor. So as a value investor, you want to look out for opportunities, dislocation opportunities in assets with very great fundamentals, and then you take a position in there. So some of the names, some names are currently trading at high double-digit PE ratios. So I'm expecting you'll begin to see some multiple collapses, collapse, and so that for me is an opportunity for you to gain, some position in there. I know some people that were screaming on top of their voices, when is this correction going to happen? Now our opportunity has been provided. Nothing has changed about the fundamentals of these businesses. The only thing is that there's no more things competing for the money that Nigerians have. And you have Dangote is competing for that money. You have liquidity demands as school resumes. You have profit taking as people try to lock in their gains. You have treasury bills, because the fact that treasury bills are still available, still competing. Corporate bond, other forms of securities are competing for the money that Nigerians have. And guess what? That means what is now available for investment in the equity space is lower. So if you are a financial institution, in fact, one of the other things you're also going to see is that interest income will go down, because, this is now being opened up to literally everybody. Who will keep his money in the bank for the bank to use and make money? Nobody. Everybody would. I wouldn't rather sit, on 5%. Instead of going to where I can get 20%, so that is one of the things. That's one of the things I'm seeing that would bring a lot of pressure to the equity market. So I think this would actually strip the hype from the real fundamentals, because we will now know who, because for you to be able to attract funds, or for you to be able to actually attract investment from Nigerians, that will mean that you are really doing something very good.
Of all these sectors somebody can actually invest in, from equities to bonds to the rest of them, and Dangote is coming up, what do you think Omo has as an advantage over everything?
Because, by the way, you know that fixed income securities is the surest. We saw what happened to. It will literally give a lot of knee-jerk reaction when you talk about investing in commercial papers and corporate bonds, and so that actually gives a lot of credibility, even more credibility to government bonds, because government bonds are generally assumed to be risk-free, and now you are having a government-backed fixed security, or a government fixed security, paying as much as 20%. That is if that's an advantage, it's not such a huge advantage. I don't know what is. So for me, almost sits in the nexus of being, number one, being risk-free, essentially risk-free. Number two, paying the highest returns when you talk about risk, fixed income assets. So like risk-free fixed income, because even commercial papers are still fixed income assets, but risk-free fixed income assets, I think Omo sits at the top of it. So I think Omo would be very competitive. So it's for Nigerians to really think of where they want to allocate. But I'm very inclined to believe that Nigerians would begin to look at this.
Before I ask you the investment, if you were actually to start investing in the equity market, the stocks you would like to invest, let me first of all want to hear your thoughts about this general, should I say, if you believe, not general belief, that the market is about to crash. Is it true? So
the reason why people believe that the market is going to crash, especially the NGX, is because of when you talk about the market, they talk about the equity market because of the competitors. If you look at the government is seriously very much in the market to continue to borrow. They have sucked out, in fact, as at June, I think they had even sucked out over 16 point something trillion from the market, and they are keeping with this Omo. You're going to see at least 10 trillion will get out of the market. These are, and by the way, these are what would when you talk about competition. Fixed equity markets competing with these fixed income markets. That's just the reality. And the more attractive markets, the more you are pulling funds away from the equity market. So that's why it's on the basis of that people are like saying, okay, if the CBN is very, very much literally all out to to mop up excess liquidity, then that means the equity market will have nothing really to prop itself up. So that is the main reason that people are saying that the market will crash. But I mean, for me, if you ask me, I mean, the market is still at 56%. The All-Share Index is still at 56% year to date. So that doesn't look like a market that is about to crash. Except we are going to see what will happen. I know that for sure we are most likely going to have some dislocation because whether you like it or not, once Dangote listing comes within the horizon, then a lot of Nigerians would want to rotate out of their holdings into to invest in Dangote. For me, I don't see that as. By the way, let me tell you something. As a value investor, I love market crashes. I love market crashes because let me tell you, when market crash, I mean, by the way, wealth is created during market crashes. When the market crashes, it allows you to buy things at insane discounts. You are literally buying on pennies on a dollar because let's say a company whose share price was worth 1,000 naira per share. In a decent market crash, a 50% crash, would be giving you at 500 naira. That means you can buy two of those names or two shares of that particular name for or a share of that particular name for half the price. That means you can buy two for the price of one. Yeah. So that is, and that gives to average in at a lower cost base. Investors should see market crashes not as something that, if it happens, by the way, but at least market dislocations as an opportunity for them to ladder back in and then average the market recover, because the reality is that historically speaking the market always recovers. So once the market recovers, you get a good entry, then you are going to be good. Look of Dangote Sugar. Maybe I should not mention names for now, but Dangote Sugar, we had that, you've seen that insane retracement that we had, and that's because Dangote Sugar did a rights issue, and that for that, because of that, you saw the insane downward price action. Does that impact in any way the value proposition of Dangote Sugar? Not exactly, but it's an opportunity for that dislocation, as people, of course, investors always want to offload some of the new shares that have received. That's, for me, if I were not qualified, even if I were in that rights issue, I would still look at it as an opportunity to buy back again in the secondary market.
If you actually want to invest, let's assume you are a newbie and you want to invest. What stocks will you invest at this point?
So the stocks I will invest at this point will be the stocks that are most likely going to benefit from what we're seeing in the markets now. Number one, I will be looking at names. I will look. I've been looking at names that have been trading at discount, what I call discount to value. If you look at, if you look at the telcos, a name like MTN is now very discounted. Look at, it's now trading at 805 naira. It's trading at. Let us look at that. I look at this and I see a name that is very, very highly discounted. MTN. So let's look at MTN Nigeria. So if you look at this, so even at this, yes, MTN, you would say it's close to its 52-week high. But speaking purely from valuation perspective, do I still expect the MTN to come down? Yes, I still expect, because of a technical thing called fair value gaps. Yeah. If I speak technical, I will tell you I still expect them to come down. But even at this valuation, even at this price point, MTN is still undervalued. It's trading at 11.9 times earnings. Yeah. So that is still cheap. When you compare it to Airtel, that is trading at over 21 times earnings. If you look at Airtel Africa, it's trading at over 21 times earnings, which tells you that that tells you where MTN is literally. So I think if you look at it, Airtel Africa, let us look at, help me get that. Good. So if you look at this name, you can see that I don't even want to go technical, because technicals you would see on trading at over 22, almost 22 times earnings.
Yeah.
That is literally almost twice. MTN is half as cheap. So for me, this MTN represents a huge opportunity. The other opportunity I would be Dangote Cement. You know, I would still mention. If you look at the fact that Dangote Cement we are operating in a high interest environment, and Dangote Cement, if you look at their last earnings call, they're sitting on an insane amount of over $500 million in terms of cash. Sorry, in terms of cash. So that means that is a company that, in fact, even if they choose to deploy that cash, even in this like this OMO that we're talking about, if they choose to deploy that cash, it's still a huge amount for them. So Dangote Cement, for me, is a name that represents a very serious opportunity. Yes, you would also say for Dangote Cement, if you look at year to date, it's performed exceedingly well, but it's also close to its 52-week high. Yeah. But for me, I still see, would I still be enter this at this point? If you compare Dangote with the likes of HBM and the likes of Bua Cement, you still see that Dangote is the cheapest. You know, Dangote is the cheapest stock. So I would still, I wouldn't have a hard time allocating, accumulating Dangote. Do I think that the price would still come down? Yes, speaking technically, because of the imbalances, the fair value gaps I'm seeing there. I'm speaking technically now. Okay. Now, if you look at even in the oil and gas space, I would also want, we've been talking about, I talked about Aradel. There's another name I would also want to look at this point, and that's Etana PLC. Etana PLC for me is even at this price. I mean, it's been largely ranging. If you look at it on the weekly time frame, it's been largely ranging. Would I accumulate Etana PLC? Yes, I would accumulate, because if you look at this range, it is actually trading at the midpoint of the range. Yeah. But beyond that, the Etana reported very fantastic numbers. If you look at the last earnings call, very fantastic numbers. And of all the oil companies, if you look at it, Aradel is trading at over 21 times earnings. Yeah. You have Seplat is trading at about 15.5 times earnings. You have Total is trading at over 20 times earnings. But guess what? This guy is trading at 6 times earnings. So from a value point of view, you would see that this Etana PLC is also a name that you could be considering. Okay. So now, then I will also look at also in the banking space. Now, banking space, I would look at a name like someone asked me the question and said, "Why do you guys always talk about the you always talk about you are considering banking?" I told him that number one, liquidity. Yeah. Because if you look at, there is one of the challenges we have with Nigerian banking. Of course, so you see the reason why, for those people that really understand fair value gaps, they will know why we have the current price action, and they will know the way the price is going. But let me tell you something. Why do I like to talk about the FOGAs? That's because this is how things work. You have a name that is a discipline in terms of balance sheet, begin to attract a lot of international portfolio investors or foreign portfolio investors because the analyst community begin to look at it very critically. And then you begin to have, and most of these investors follow analyst reviews of what they perform. Even look at these companies are printing, these are cash machines, really. So of course we have not hit half-year result 2026 yet, but I'm inclined to believe that Zenith Bank will also do something very wonderful. So Zenith Bank is a name that I would I would think of accumulating too. I would have accumulated it very well because of, like I say, imbalance, fair value gaps. I would want to really accumulate it when it takes out this sell side liquidity.
Okay.
Yeah. I would want to, when it takes out that sell side liquidity, and then so that I know that what is now hunting is for this buy side liquidity. You know, but for me, I think Zenith Bank is a name. It's a name. It's trading at, if you look at Zenith Bank, it's trading at less than 4 times earnings. Okay. Banks generally are trading at a ridiculous earning because these guys there, and even even at that, okay. If you look at Zenith Bank, I'm very certain by the time the earnings report come in, the H1 or Q2, you will see that some of these names will drop to the earnings, or the price to earnings will drop to as low as 3 times earnings. So this represents an opportunity. Zenith Bank for me. The other name I would also mention would be Access. I would also mention Access Bank at this point. Why am I looking at Access Holdings? Access Holdings for me is I know that it has done a very serious run-up from the last place we called, but I think Access Bank is still, I mean, this is a bank that is trading at 1.6 times earnings, you know, so that tells you that that's a huge opportunity. If that is not a huge opportunity, I don't know what is. Okay. Other companies that we just mentioned, some of them are trading at literally like 20 times earnings, all of that. Yeah, this name has been issue of our credit quality, issue about impairment charge, and all of those things. But I believe that by the time the numbers for 2020, half year 2026 shows up, I believe that we're going to see some positive turnaround in terms of the impairment charges. So I think Access Bank would be a name for me. I would happily accumulate Access Bank even at this point.
Okay, now you've actually given you talk about MTN, Airtel.
No, I didn't mention it. I said MTN.
Okay.
And then I went into the cement side. Okay. And I talked about Dangote Cement.
Okay. All right. Now, before we go, I'd like you to actually tell us what this means to you, Omo. What does it mean to you as a person?
Omo means that we are going to see a lot of contraction in terms of liquidity.
And you're a long-term investor.
Yeah. No, Omo is not a long-term thing.
I say you for
me, Omo is not a long-term thing. Yeah. But Omo to me is, it shows because by the way, Omo only influences the short end of the yield curve. Yeah. Not the long end of the yield curve. So for me, Omo is an opportunity to cause a dislocation and create generational buy opportunities. That's just what it is, because the discerning investor, the average investor, will not be smart enough to understand that equity opportunities will show up a lot because of the Omo. A lot of people will run out of Omo because the fact that you're having 20% now does not mean when the price will go up, yields will come down. So guess what? The interest, you might even get to the next one at maybe 16 or 17%. It created a buy opportunity for discerning investors to enter into the market. For example, I mean, wouldn't you want to want to be looking out to buy at Access Bank at 20? What about 2021? Yeah. But if you buy at 21, it goes back to this point. You have almost done 50% return on your money. So it creates opportunity for discerning investors with long-term thinking to really enter into the market at very good prices.
All right, thank you very much. I think you've done justice to the conversation.
You're welcome.
Thank you very much. Now, this is strictly for educational purpose. We are not financial advisors. Before you do any investment, you consult with your stockbroker, your bank, or your financial advisor. Now, my name is Providence, and this was Clockwise Live. Do not forget to like, subscribe, and also put a notification bell on this channel. I'll see you again.